it's not the only one, but it is clearly coming quite at the top. Consider that historically utilities have been considered bond proxies, ex-growth, just defensive names that you really buy when the market is going down. Whereas the key difference is that a stimulus like a Green Deal provides top-line growth, and provides top-line growth for about 3 decades. And this is just coming from Europe. Imagine if climate plans were to expand globally and net zero policies ultimately were to effectively follow the European leadership and be applied everywhere. So the utility sector, particularly what we call the climate champions, those companies with a big sizable, let's say, exposure to renewables and electricity network infrastructure, for instance, those companies will clearly be able to deliver, mid to high single digits to double digit in certain cases, top and bottom line growth for literally nearly 3 decades.
One of the challenges, it seems to me, Alberto, is that a lot of the green energy plays have come a long way year to date already. So in valuation terms, it does seem quite difficult to buy and feel comfortable at these levels. Are there some stocks or sectors of renewable in particular where you can invest at the moment and there's more risk built into the price? Perhaps you get a better opportunity to get in at the ground floor.
Yes. I mean, stocks price in those factors differently. And I think that when you look at historical valuations, some investors may not feel comfortable in looking at utilities and paying 10 times EBITDA or between 16, 17, 18 times earnings. However, it's really a paradigm shift we're talking about here, because those companies are really going to deliver so much growth that I think what the market is understanding right now is really the tip of the iceberg. I mean, just give you an example. We're only putting into our estimates to 2030 broadly half of what we think the European Green Deal is actually going to imply. And we still have 30 to 40% upside to our sum of the parts on most of these names. Now, if you start to put all the Green Deal and you start to value growth until 2050, we stop half the way through. So we stop in 2035 to value growth. Then it's 50 to 60% the upside. If you actually expand the Green Deal scenario to US and South America, the upside is above 80%. And we're not even value renewables as a perpetuity. Now, the question to you is, if we're moving into a world where 90% of our electricity is going to come from renewables, and where a larger percentage of the economy is electrified, think about electric vehicles, think about electric heating. Well, in that case, renewables are here to stay. So you should probably value these activities as a perpetuity, which would imply that most of these names would double. Now, as a reminder, we have on our conviction list RWE, EDP, EDPR, and Enel.
Let me jump in here, because there are also those who are saying that the new world will also imply that we are all using less electricity going forward. So wouldn't that be a counter argument against buying into utilities?
That's a very important observation. And I think that when you project power demand in the future, you should first learn from the past. In the past, let's say 30 years, power demand has been growing by GDP minus broadly 1%. So if GDP doesn't grow much, there's no power demand growth. And we have seen anecdotally that every time you do a thorough refurbishment of a building, be an office, a hotel, or a home, or when you implement energy efficiency measures, insulation, you can really cut energy, and in this case also electricity consumption, between 20 and 30%. So you can expect in the next 30 years to have 20 to 30% reduction whenever there is refurbishment. And we think this is going to put an extra, 0.5% or so pressure every year. However, against that, you need to think about 3 extremely important factors. Number one, the electrification of transport. If we only took passenger cars in Europe and switched to electric tonight, tomorrow power demand would be up also by 25%. So electric vehicles would already more than offset energy efficiency, because you cannot apply energy efficiency to every single part of the economy in such a, even if it's 3 decades, short space of time, relatively speaking. Second point is electrification of heating. I mean, natural gas is a source of pollution, and it's unlikely to have capture sequestration in every home. So if we gradually move towards heat pumps, as suggested in several EU papers, that also would imply a 25 to 30% upside to power demand. And then we need to think about potentially the process of electrolysis, which creates hydrogen by breaking the molecules of basically water. And that is a very electricity intensive process. So actually, if you think about what we discussed in the report we wrote early last year, which was actually called Electrify Everything, this is actually a good proxy of what's going to happen. A larger and larger part of primary energy is going to become electricity. Electricity today is not even 20%. It's like closer to 15, actually, percent of primary energy. By the end of the Green Deal, is going to become between 75 and 85%. So it's a total transformation of the economy, which really starts from the seeds planted by the Green Deal plan.